Hi, I'm Chris Layne, and when I'm not helping business owners with their commercial loan needs, I'm listening to the P.O.W.E.R podcast by EVB.
Being a woman in business can be demanding and draining, but that has never deterred a determined woman to go after her dreams. That's why you're in the right place. This is the Power Plug podcast, brought to you by EVB, where we believe in the power of you. At EVB, we're proud to be the first community bank in Virginia to reach out to women in business with a customized program designed to meet your unique needs. In each episode, expect to hear engaging interviews filled with advice, insights, and recommendations to charge you up and build your business. Now, for your host, Mary Foley.
Welcome back to the EVB Power Plug podcast. You are in the right place for P.O.W.E.R, the potential of women entrepreneurs realized, and all women in business with an entrepreneurial spirit. I'm Mary Foley, and today is episode 16. Spring is in full motion, and I'm wondering if you have sprung yourself over to evbpower.com lately. Did you know that you can check out all the latest EVB Power event calendar events and find out more about the Power program? Oh, and my favorite thing, you can find all of the Power Plug podcasts right there. Plus, you can subscribe. You can have all the episodes, past and new ones, delivered to your phone. That's so simple and so convenient. You just go to evbpower.com and you click on the app icons to download either the iTunes app if you have an iPhone or the Stitcher app if you have an Android phone. Then you can create a free account and boom, you are ready to listen and sharpen your business knowledge wherever you go. And today is no exception. Today, we're talking with Chris Layne, Senior Vice President and Director of Commercial Banking at EVB. Chris has been in banking for over 10 years in the Richmond, Virginia region. And in addition to helping business owners, he is also co-founder of TeamKRL, a nonprofit organization focused on helping middle school and high school students in his hometown of Huntington, West Virginia, so they can learn life skills that they often don't get in the classroom. Chris, thanks for being here on the EVB Power Plug podcast.
Hey, Mary, happy to be here.
I am glad you're here because here's the thing. We all know businesses are created to make money, but so often we need money to make money, which is where a loan can come in. And many business owners, myself included, I've gone through the process of getting a loan to buy a house. But when it comes to a commercial loan, it can feel like another kind of mystery. And I want to pull back the curtain and get a real understanding of the who, what, when, where, and why of getting a loan. Does that sound good to you?
Absolutely.
Okay, great. So I want to start with a really kind of basic question. From your experience, what are the common reasons that business owners even need a loan?
Well, business owners could need a loan for various reasons. One could be to purchase a piece of commercial real estate for their business. A lot of business owners have equipment needs, working capital that can include short-term working capital needs, long-term working capital needs, as well as startup working capital for those businesses who are brand new and just starting out. Loan needs could also include business expansion, whether that be a business want to purchase another business or line of business, or as I mentioned at the outset, to purchase an additional piece of commercial real estate for an additional location for their business.
Do you find in your experience that there's a more common reason than others, or is it just really across the board of all kinds of reasons like you've just said?
It's across the board. There's so many different types of businesses out there. And it really is amazing when you think about it and how just how people, make money and how people help others in the community. So, the loan needs really vary across the board. So, the common needs, of course, you do run across a lot of, needs around commercial real estate and equipment. Those are sort of, the bread and butter, as we call it. But, working capital, lines of credit and things like that, are fairly common, particularly for those in the manufacturing industry and that type of thing. So those are fairly common, but not as common as commercial real estate or equipment needs. So.
Okay, yeah, that sounds like it all takes a lot of upfront money. So tell me, what's the difference between a business loan and a line of credit? Because that is a little confusing to me.
Yeah, so, business loans are more so term loans in nature, and those loans are primarily put in place for long-term, fixed assets, i.e., commercial real estate as we talked about, equipment as we talked about. If you want to purchase another business or line of business, those are the long-term, although that is technically not a fixed asset, but it's a long-term situation. So we would want to do a term loan versus a line of credit in those types of situations. A line of credit is revolving in nature, meaning you can borrow against the line and then you pay down that amount, and then that goes back into the line. So, for example, if you have a $200,000 line of credit and you advance $100,000 against that, once that $100,000 gets paid down, then that $200,000 is still available to you going forward. Those are meant for more short-term working capital needs. For example, I just mentioned manufacturing companies. So oftentimes a manufacturing company will manufacture a product for their client or end user, and there's a period of typically 45, 60, 90 days before they receive payment for that product that was sold. So they have a gap, and they need to cover those receivables. So a line of credit, it would be at their disposal to help float those receivables, if you will, as we say in the banking business. So that's where you typically see the lines of credit, and those are generally for a 12-month period versus I mentioned on the loan side, term in nature that could be 3, 5, 7, 10 years or so. That's the main differences, or those are the main differences between business loans and lines of credit.
Got it. Okay. So and when it comes to line of credit, I'm thinking to myself, okay, I could get a kind of line of credit as a home equity line, based on the asset of my house. In the asset of my business, is it typical for business owners to have a line of credit just there if they need it? Or does a bank say, no, we want to know the reason why you may need it now?
Yeah, generally we like to know the purpose behind it, because any money that leaves the bank that goes out to a business owner, we do need to know the purpose. So if it's, as I mentioned a few minutes ago, if it's, to cover accounts receivable for a certain period because we understand their payment cycle, that's a good purpose behind the line of credit. Sometimes it's, to facilitate some other specific need where a line makes sense over a business loan, then we can put that line in place, but we do know the specific purpose of those funds. So when the request comes in to advance any money against the line of credit, then we understand why that is, and is the amount, does it seem to be in line with what the need is or needs might be. But just, gone are the days of, well, we'd like to have a line of credit just in case or for emergency purposes and that type of thing. Just with the regulatory environment changing as it has, and we all know it has over the past few years, it really behooves the bank and the client to really understand one another and know the specific purpose for those funds.
Not long ago, I received yet another offer in the mail for a loan just to magically give me $500,000. I didn't ask for. It was from a company I didn't know. It wasn't a bank, by the way. I mean, the company doesn't know me. They don't know me in business. They don't know even if I need the money, but they want to loan it to me anyway. So I got to ask, what are these kind of offers, and should I really be wary of them?
You definitely want to do your homework and do your research to understand, these offers that I'm receiving, where are they from? Is this a legitimate financial institution, or is it a non-traditional financial or non-traditional institution? But the piece that I would be wary about, and again, this is part of doing your homework and research, is, are those high interest rate loans? What's the repayment structure, and is there collateral needed, and if so, what does that look like, and all these things. Most companies, you start your business if you're at that cycle, and you go into this long term. So what you want to do is really look at, how do I establish a long-term working relationship with a traditional bank? And you have to really think long term. What's the strategy of my organization, and where I want to take this thing, and how does me establishing this relationship with a bank, how does that fit into my overall strategy? So that's what I'm a huge proponent of, and that's what I advocate, because at the end of the day, that's going to serve you better down the road than just taking, what I would say, put a Band-Aid over the situation, and you go with some of these non-traditional bank lenders and other companies out there who are willing to just throw money at you and not knowing your situation. That you can find yourself in a tough spot.
I was wondering about those high interest rates. That would be the first thing I would think of, but obviously there's some other terms too. But I love what you said about relationships. What are some of the additional advantages that make sense for the bank as well as for the business owner to build a long-term relationship?
Well, let me first say, Mary, that, building relationships is really at the core of what we do here at EVB. And that's what I believe in personally as well, because, let's just face it. I mean, we all as human beings know, at least, know what a good, true relationship, what that feels like. And it makes you feel good on the inside. But more importantly, I think that, when you have a relationship with somebody, and that you can reach out to that banker or whoever your contact is within the organization, they know your business, and you know them, and the bank. So, it's easier to have those conversations around, what your needs might be, or some challenges. I mean, sometimes, you have to have those tough conversations around struggles and challenges that you have, and you want to know that, hey, this person understands my business. They know, my history. They know how I started, how long I've been around. And if you hit a couple of bumps in the road, that's really where the relationship comes into play, because, we were just talking a few minutes ago about some of these other organizations out there that throw money at you. When times get tough, those companies aren't going to be there because there is no relationship established. They don't know your situation. And when you have a relationship established with someone, the more they know about you, the more they know about your business, the banker that is, the more or the better position that they're in to help when times do get tough. But even when times are good, it's much easier to reach out to that person or organization that you have a relationship with and say, hey, here's what I need. Can you guys help, or are you willing to help? And you don't have to, retell your story or reintroduce yourself to, someone else, because they know the history, they know your situation. That banker, oftentimes, if they're intimately involved or have intimate knowledge of the company as they should, they oftentimes can anticipate what your needs might be a year from now, and then they can have that conversation with the business owner much earlier rather than later, and be proactive in helping that company continue to meet, whatever milestones it may have set for itself, or just be in front of a situation that, hey, I know this company is going to need some equipment, because the equipment that they've had for the last few years is coming to the end of its life cycle. So let's start that conversation earlier rather than later to say, hey, what types of equipment might you need? We can help finance those pieces of equipment. And I think that just shows, the value that relationships can have in any given situation. So that, to me, has always been very important.
And it actually makes me think about your experience building your nonprofit, the TeamKRL, and that's out of your hometown. I remember you told me in Huntington, West Virginia. How has building that nonprofit actually helped you relate to business owners more?
Well, several years ago when my two partners and I sat down and began talking about what we can do to give back to that community, and that's a community that gave a lot to us, growing up, and helped us turn out to be the people that we are today. Quite frankly, without us building relationships, and well, let me first take a step back and say, without us establishing relationships and then building upon those over the past several years, there's absolutely no way we could do what we've been able to do over the past 8 years. So that really helps me relate to business owners when I'm talking to them, and particularly for those who are in the early stages of the business life cycle, if you will, because I know I can understand and empathize with the passion that they have behind it, the need for those relationships that they need anyway, and the bank needs as well to help that company get to the next level.
That's great. And I'm sure you're making an impact with those kids. There's just no doubt about it, you and your partners. Well, listen, you're already helping to part the curtain on these business loans and understanding. Let's pause right here for a quick break. And when we come back, I've got some more questions for you. Okay? So hold on. We'll be right back.
Hi, this is Julie Hill, the Director of P.O.W.E.R at EVB. As a woman in business, you know that it all comes down to great relationships with your customers, employees, and suppliers. That is why it's critical to have a banking partner who truly meets your financial needs and someone you know and trust. And that is why we've designed the P.O.W.E.R program to help you make valuable connections. Whether it's with one of our small group P.O.W.E.R join-up sessions, sponsor events, online P.O.W.E.R member directory, or the P.O.W.E.R Place Facebook group, we want to help you create great relationships to grow your business. To find out more, go to evbpower.com.
Welcome back. This is Mary Foley, and today we're talking business loans with Chris Layne, SVP and Director of Commercial Banking at EVB. And Chris, let's say we've had a conversation about my business and what I'm trying to do and my funding needs. All right, so we've had that conversation and we've started that relationship. Tell me what happens next in the loan process.
Okay, so we, as you mentioned, we start with that initial meeting, and we talked a little bit about relationships a few minutes ago. So that's where the relationship building begins. And generally, we always like to learn as much as we can about the business, as much as we can about the business owners, so that we can have a full understanding around what's driving this loan need, and so that we understand the payment cycles and the cash flow cycles and all those types of things around the business. So we then would request certain financial information, which is typically 3 years of 2 to 3 years of business financial statements, tax returns, et cetera, on the company or business, to include 2 to 3 years of tax returns on the business owners, personal financial statement, and there could be supplemental information as well that we may request depending upon the loan need. And so we collect that information, which generally could take a week or so, just depending on how long it takes the business owner to compile the information and get that to us at the bank. Once we collect that information, we do a preliminary analysis of the information. We have analysts who we work with as part of our team, and we provide all of this data and information to the analysts, who then sort of take all that information and break it down into a bank format that provides ratios and other things that we, as the banker, to include our credit partners, review and analyze as well. And we factor in that loan need or financing need so we can understand, is the business generating enough revenue and cash flow to support the level of debt that they're looking to take on. And that, could take another, couple of weeks for all of this to happen. Once the underwriting is completed and everything is done, then it goes back to the banker for a review, adding additional information that might need to be included, and then it goes to the appropriate approval authority, which is based on the size of the loan for decisioning. And then once the decision is made, then the proposal, assuming all is approved, the proposal gets drafted, and submitted to the client for their review.
Okay. All right. So it sounds like the bank's doing a lot of the heavy lifting after the business owner gives a lot of the information. So you mentioned about this approval authority. Who really makes a decision of whether or not a loan gets approved? Tell me a little bit more about that.
Yeah, so each account officer or banker, relationship manager, each person has a certain level of approval authority. And again, that's driven by the size of the loan. Outside of that particular relationship manager's approval authority, we have various internal committees within the bank. And again, it's driven by the size of the loan to include the overall relationship. So if we have multiple loans out to a particular entity, those are factored in as well. So we look at the overall relationship, and then that's how we determine which committee at which level that particular loan request goes to for approval.
Okay, so really it's internal. It's the internal to your bank that is making that decision for, at least for EVB, right?
Correct.
Got it. Okay. About how much time does it generally take? If I'm a business owner, I'm thinking about planning. I may need the money now. I may need the money in 6 months. Give me some sense of how much time this generally takes.
Just from start to finish, it can take anywhere from about 2 to 4 weeks or more, but a lot of that is driven by the size and complexity of the loan. So for your just, everyday sort of general needs, on the smaller side may just take, a couple of weeks to turn that decision around. But your larger, more complex deals that may just involve a number of different moving parts could take anywhere from 4 to 6 weeks. And again, if you have like real estate, for example, because you have other things just outside of the approval itself, i.e. appraisals or environmental assessments and things like that. So that could drive the process a little bit longer.
Yeah, I can imagine some of these more complex would take longer. So it's probably better to talk sooner than later. Might be
Absolutely.
A good way of looking at it. Yeah. Is there a big misconception or misunderstanding about getting a business loan that you run into again and again as a banker?
Mary, the thing I'll say that I feel like I hear most is, we as banks only want to lend to people who don't need the money. And that's a huge misconception because, at the end of the day, when banks lend money, they lend money to folks who have the capacity to pay back the loan. So I feel like oftentimes it's those who just aren't in a position to qualify for a loan are those who make those comments. However, companies that are very profitable need money to do certain things, whether it is to, purchase a piece of commercial real estate or to construct, a new piece of commercial real estate or buy a very expensive piece of equipment. So while those companies may have a certain level of cash on hand or liquidity to support them just paying for a piece of equipment, they would rather, borrow and better leverage the cash on hand, and then they can pay that note back, fairly quickly. So that is what I feel like is a huge misconception is, we just want to lend money to people who don't need it. That's not true.
If we're one of those people where we're thinking, oh, I don't think I qualify, we're making some assumptions, should we talk to you anyway?
Absolutely, because part of our job is not just to lend money, but it's also to help educate the borrower or the client. And that's a critical part of the job, quite frankly, because oftentimes, if you have a client that comes to you that says, I have this need, I would love to borrow, however much they need to do that particular project. Although today they may not be in a position to borrow the money, you can educate the client on, one, here's why we can't lend you the money today. However, if you can do these things in my review of your financial statements, if you can do these things, it might be cut expenses, it might be build liquidity, it might be build more equity in the company, or what have you. It can be a number of different things. But if you educate the client is willing to listen, hear you, take your advice, and sort of, take the next steps accordingly. Oftentimes they can put themselves in a position to then borrow the money, whether it be 6 months from now, a year from now. And I've personally had situations where I've had to do that, and the client, it might have taken a year to 18 months, but, all said and done, they were in a position to then borrow the money. And that, again, and I keep coming back to relationships, but that's why the relationships are so important, because you can have those conversations. The client typically will, take your advice, and they'll do those things, and ultimately they get what they need to get. It might take a little bit longer, but it's a win-win situation, and they truly value that advice and that education that you provide.
Well, there are so many new regulations over the last several years that have to do with banking and loans and all of that as a business owner, it can get very confusing about what's possible anymore. Do you find that in the last several years in particular that it is easier to give loans, harder to get loans, about the same? Give us a sense of that.
There's more required internally oftentimes, not just here at EVB, but other banks, because there's other processes that have had to be built into the overall arching process within the bank. But and sometimes more information is required of the client that they have to provide as well. But the process overall, from a client's perspective, shouldn't be that much different. I mean, we've always had to, collect financial information and other things in order to make a decision on or the appropriate decision on loan requests. But I mean, I think that things have tightened a bit, and we can't do all the things we used to do in the way we used to do them, but it's still, I think, for the right companies that are doing the right things and all that, it's not any more challenging today than it was 10 years ago.
We're almost out of time, so wondering if someone wants to get in touch with you, Chris, maybe have that initial conversation, maybe figure out, do I really need a loan? Do I really need a line of credit? Perhaps get your 2 cents on their situation. How can they get in touch with you?
Certainly. They can contact me, again, Chris Layne, that's Layne. My direct line in my office is area code 804-997-2418. You can also reach me via email, which is chris.layne, Layne, @bankevb.com.
And it's Chris with a C, right?
Correct.
Got it. What's one last piece of advice, Chris, that you'd like to leave with everyone today?
I would say, if I were talking to a business owner, I would say just be open and honest with your banker or relationship manager, and sharing information. Don't be offended if they request certain information or ask certain probing questions, because again, in going back to the relationships, the more information that your banker or relationship manager has, the better positioned they are to help when you have a need.
Got it. Makes a lot of sense. Thank you so much. Chris, thanks so much for your time and your expertise today. You've been terrific.
Thank you so much, Mary. Appreciate it.
Isn't it amazing everything you need to know to run a business? Today's guest shared a bit of their expertise to make us all a little smarter. Often the smartest, most productive thing is not just knowing what to do, but knowing who can do it for you. That's one of the reasons why the EVB Power program is so, powerful. With over 600 members and growing, we have hundreds of women in the region who are experts at what they do, and they share those powerful connections. I know firsthand because as the Director of Power at EVB, I get to talk to them every day and help foster those connections. I'm Julie Hill, and I would be happy to talk to you too. To find out more, reach out to us at evbpower.com.
Wow, that was fast. But we hope that you're feeling recharged and re-energized to continue to power up your business and go after your dreams. Love this Power Plug episode? Let us know. Leave a comment on Facebook or visit us at evbpower.com, where you can hear more episodes just like this one to keep believing in the power of you, just like we do.